Hello everyone and welcome to this new episode of the Privacy Rules webinar series. Today we are going to discuss about blockchain and cryptocurrencies in relation to Libra, the currency from Facebook. And I'm glad to be joined by our experts in this sector from different countries. We have Gabriel Erikdorf from Switzerland, Datalex. We have Steve Han from Seoul in South Korea. Then we have Roderick Walsh from Tanner DeWitt in Hong Kong. And finally, we have Ruth N. and Xinglon Lim from Taylor Wintersvia in Singapore. I would like to immediately start to discuss about our topic of today, since we don't have very much time during the webinars. And I would like to immediately start with Gabriel and then follow with the other members discussing about basic information on blockchains and cryptocurrencies. What are they, how they work, in order to have an overview on which is the topic of today.
Thank you very much, Alessandro, for inviting me to this webinar on the Facebook project, the Libra cryptocurrency. It's also a great pleasure to share thoughts with my colleagues from Hong Kong, Singapore, and South Korea. I would like to introduce the topic of blockchain because a cryptocurrency is essentially based on the technology that is called blockchain. So what is a blockchain? Essentially, a blockchain is a chain of transactions that is written in a registry that is decentralized and validated by all the members that connect to this network. So each time there is a transaction that is made by a user of this chain, this is a block that is combined to all the transactions that are all blocks put together and written in one registry. So it's a bit like if you have an Excel spreadsheet that all the members of this chain will update and validate all the time. So this is why we call a blockchain, because it is a chain of blocks that are put together and validated, which we call a consensus by all the members of this blockchain. So it is decentralized, encrypted, transparent. You cannot delete the entries of the data because it's validated. So the more people you have, the more user you have in this blockchain network, the more strong it is, because it's very hard then to unvalidate those transactions. And there are some other challenges, such as with privacy, how do you erase data? There are also, with cryptocurrency or blockchain, question around tax law or antitrust, but also regulatory that we will be talking in this webinar. So the Libra project has been initiated by Facebook, and there is the creation of an association in Geneva, Switzerland. So it is pretty interesting because the regulator in Switzerland are pretty open to fintech, in particular to cryptocurrencies, and they are welcoming those initiations of projects compared to other countries such as the USA or very recently France or Germany that would like to ban this project from their territory. So I would like to ask my other colleagues about how is the approach on the regulatory approach on cryptocurrency in your country. Maybe we can start with my colleagues from Singapore.
Yes, Gabriel, just to follow on the question on the status of cryptocurrency regulations in Singapore, I think broadly speaking, the government here classifies cryptocurrency into two main categories. Generally, it would be capital markets products and non-capital markets products. So the definition of capital markets products as defined in the Securities and Futures Act is actually pretty broad. So they can consist of debt instruments, equity instruments, or something even like a unit in a collective investment scheme. So coins that have characteristics that ascribe certain sort of profit sharing functions, for example, even voting functions, right to receive some sort of dividend or some sort of repayment, those would be heavily regulated and come under the Securities and Futures Act. So if you think about the vast majority of tokens out there, the altcoins, most of them actually fall under what we will call the utility tokens. But in Singapore, there's no such concept as a utility token. we have capital market products and non-capital market products. So in the future, there is an act that's going to come into force soon. It's called the Payment Services Act. That act is interesting because it creates a new class of tokens that is called e-money as well. So between what we call digital payment tokens, which are similar to the concept of utility tokens in the US, between digital payment tokens and security tokens, there's a new class called e-money. So we believe that most of the stable coins will actually come under this category. And the government has actually stated that the main aim of this regulation is not to limit the use of the coin, nor is it to overly regulate. The key concern, at least from a regulatory perspective here, is anti-money laundering and ensuring that the issuers and the exchanges conduct sufficient KYC and AML sort of checks on the persons that access those coins. So once again, going back to the same point, the point of the regulatory authorities here is not to control the usage of it, but just to ensure that the people that trade in it do not misuse the technology.
Yeah, thanks, that's very helpful. And I think that's pretty similar as in Switzerland, because the aim is really to inform and protect, inform the stakeholders participating and creating technology in a very open way. That's maybe why it's in Switzerland that the Libra project is going to operate, and also to protect the general public. Yeah.
And Patrick, what about Hong Kong?
In Hong Kong, the position is broadly the same. So the analysis that you would apply when you're looking at cryptocurrencies is to see whether the characteristics are consistent with how securities are defined in Hong Kong, and also to look at payment regulation. Payment regulation could either come in the form of stored value facilities, which are somewhat similar to e-money, as e-money is described in the UK, and as will soon be the case in Singapore. And certainly with stable coins, you would look at two species of regulation and assess whether they fall within them. A stored value facility would be one of them. You'd also assess whether or not the arrangements were the kind of arrangements that may be consistent with a collective investment scheme, which is a form of a security. So broadly similar to what's been described before.
And Steve, we are speaking also about issues. I see that seeing mentioned also the problems related to the money laundering, for example. So I would like to open up the next point that is related to the legal issues related to cryptocurrencies, and give the word to you. And of course, if you want to give a brief overview of how it works in South Korea, that would be interesting for us.
Sure. So yeah, I'd like to talk to you about the key legal issues related to cryptocurrency. Yeah, first, I'd like to go provide an overview, and then maybe we can go ask some questions right afterwards. And I thought a good way to provide the overview might be to go through the different stages of a cryptocurrency from its being launched and used, and see where the cryptocurrency, where the the stages touch with the law, come into contact with the law. I think Padraig and the rest of members gave a good idea of how that happens. But I think if we step back, first you look at the cryptocurrency coming into existence first. If you look at a project like Libra, you would have a company like Facebook, or maybe a group of entrepreneurs who are going to start who want to launch the cryptocurrency, and they're going to fundraise to do this project. If they're selling stock in the company that's going to be developing this project, then that part is not controversial. Most of the laws in the countries are going to, or that will come under the securities laws of the other countries, or most countries. But if it's if once the companies sign the tokens, then yeah, the question is whether that token is a security. And in most of the cases with these projects, they're selling to individuals, not just to accredited or professional investors, but to individuals, a large number of people across many jurisdictions. So yeah, the question would be whether the token is a security under the laws where they're selling the token. I think in Korea, there hasn't been any new legislation about this issue, and the government hasn't provided a guideline for it. I think I know that in Singapore, the MAS has issued some guidelines about what would be. I think they make the distinction between a utility token, which would be a token that is not a security, and yeah, I guess other types or tokens that might be considered securities. So I think yeah, that's one of the key issues that comes up for the cryptocurrencies. I think a lot of us here have done work in relation to that issue. Of course, you know, if you're selling the tokens to individuals, then you may be collecting personal information, and you know that is then you're going to have to comply with you know, laws, data privacy laws, and then after the token is issued, in most cases, they're going to be traded. Often they will be traded on an online cryptocurrency exchange, and then the issue is whether this exchange requires a license to operate that business, which is to allow users to trade cryptocurrencies. And again, I think that also falls under payment, could fall under payment services if you're handling cryptocurrencies. I think another issue that yeah, Alessandra, you mentioned is AML KYC obligations. I think cryptocurrencies have been in the news for being used by, I guess, those engaged in criminal activity. I think the case in the U.S. is the most famous. The black market, the online black market at Silk Road. There was a lot of payment being made with Bitcoin. So yeah, the question is whether these exchanges have, I guess, AML or KYC obligations under the law where they're operating. So I think that's, yeah, that's my overview. I know the members here have done a lot of legal work in this space, so I thought yeah, we could hear from some of the members about the legal issues that they have come across in relation to cryptocurrency. Yeah, Ruth or Jing Long, could you tell us about maybe some work that you've done or some legal issues or novel cases that you've come across in this field?
Yeah, sure. Just one case off the top of my head that's still ongoing pertains to the pre-sale arrangement between a buyer and a seller. So what happens is that usually when we do the private sale, there's a larger volume of tokens being transacted, and they don't release the tokens all at one go. It's done in stages, right? And in most cases, there's like a period of lockup as well. So one of the issues that we encountered was a token swap kind of arrangement between two companies with their own tokens. So one company was meant to deliver tokens in batches, and it was meant to be frozen, right? But of course, it wasn't frozen at a protocol level. It was just a contractual sort of promise that you're not supposed to sell the tokens. So what happened was that the person that received our client's tokens actually decided to sell them. And because of that, our client actually refused to deliver the remainder of the tokens that it was meant to swap. So what happened was that it couldn't be solved between them, and it actually went to arbitration. And as far as I know, proceedings are still ongoing. But just to add on to that, I think looking forward, a new development in Singapore that might be of interest to everybody here is digital securities. So that is tokens that represent securities. Now, we all know that the main issue with securities tokens is that they are regulated cross-jurisdictionally. But the good news is that there's a company in Singapore that actually is in the sandbox to actually launch a digital security tokenization and custodian and trading service. So this company could potentially be, or is already, the first licensed digital securities issuance, custodian, and trading platform, probably in the Asian region. And it has members on the board from MAS, a subsidiary of Temasek, and SGX as well. They are hoping to launch perhaps in Q2 next year, optimistically. And one of the first few projects that they want to undertake is potentially real estate-backed tokens. So that is another area of development that I think is very positive, both from an Asian and an international perspective as well. Because security tokens will essentially create a lot of liquidity. They're sort of the bridge between the private equity market and the IPO market, and they create opportunities for investments, exits for investors that may not want to wait for sale or eventual public listing. So that's one area that we're looking at, and we are very excited to be working with this particular platform. Looking forward, actually, the key thing, and this relates to data as well, is because they need to build the community first. One of the conditions of the license is that they will only be able to target accredited investors. So that is to say, every user on the platform, right, has to be vetted, both for AML, but in this case also for financial qualifications. And once we have that marketplace, the global marketplace that we hope to attract from everywhere around the world, we will have a place where securities, right, can be traded freely. And if you think about the stock market and PE ratios, it's possible that equity-linked tokens could also potentially be traded at higher margins. So that's one area that I think we're excited to be a part of as well.
And speaking about licensing, sorry, Steve, I was thinking that the Swiss regulator recently asked Libra and Facebook to enter into a license as a payment system. It results to me, I would like to know more, also because Switzerland has been chosen as the country for Libra, it appears. So I would like also to know more if there are other issues that you are aware about, Gabriel.
So yes, exactly. So basically, it's the Libra Association which has asked the FINMA to provide an indicative classification for the Libra project. So basically, if we talk only on regulatory, the FINMA, our financial supervisory authority, has indicated that a stable coin and a project would most likely fall into payment system which requires a license. And because of the way the Libra project is going to most likely operate, there are going to be additional requirements that are going to be imposed by the financial authority because there is an issue of a token not only being a payment system. So the Libra will deliver a token, and it's going to be set up by money, in a way. Maybe it's money, or maybe another way to back it up. It's a matter of responsible. Is it the owner of the token, or is it the Libra Association? It's most likely the Libra Association which will have the responsibility to ensure that the reserve is being backed up and that there are additional requirements in that regard. It's still an indication. It doesn't mean it has been already totally granted. It's the license, because there was no real application. It's only an indication. That's the status in Switzerland of the FINMA.
Okay, and Podri, to you, which are the main implications related to Libra, and which are the main characteristics of Libra in connection to what Gabriel just mentioned?
Sorry, I didn't quite catch that, Alessandro. You were saying, what are the major features of Libra?
Yes, and in relation also to the implication related to it in connection to
okay.
Yeah.
Okay. Well, I guess one way of answering that is to address why Libra is an interesting project and why it's attracting so much attention. And a lot of the reason for that is that it is one of the first projects to come along where you can see a real chance of a substantial adoption of the project itself, and for it to become something that will be used by a lot of people. So that's one of the major attractions of Libra, is the fact that you're going to have a user adoption and reaching into parts of the world that may presently be unbanked, so may not have access to physical bricks and mortar banks or other types of payment systems, but will be able to use Libra coin for various purchases using simply the device, the phone in your hand. On a more technical level, some of the particular interesting features about the project are actually its use of blockchain technology itself, because somewhat controversially, it is not a system that will be built entirely on blockchain. It is not going to be truly decentralized in the way that was described earlier in the webinar. So what will happen is that a company called Calibra, which is a subsidiary of Facebook, will have custody of the keys and coins. And what that means is that the company will be able to move money between wallet users without relying on blockchain itself, so long as those payments remain within the system. Now, if you move outside of the Facebook system, then blockchain will be used in order to make those transactions. So what that does is it gives a convenience. It speeds the rate of the transaction. That's been one of the issues with other types of payment tokens or cryptocurrencies such as Ether and Bitcoin. And for silly people like myself who lose passwords and so forth, you know that you're going to have your password and property, your coins, available even if you do misplace or lose them, because that's kind of wired into how Calibra will operate. The other interesting feature, which is something that has been a little bit controversial within the blockchain or crypto community, is that the nodes, which are what you could say the power that gives substance to the platform, the nodes are only going to be given to a limited number of people. So it's not going to be what's called a permissionless blockchain. You need to have a right in order to be able to participate in the operation of the platform itself, and that right is going to be given to people who are stakeholders, I guess, but also have the ability to make a significant contribution in respect of their financial capital in order to purchase the node. But the feeling is that certainly gives governance to a centralized number of people, and doesn't mean that it's an entirely trustless system either, because you have to trust the people who are in that governance group. So that's an interesting way to go, but it's also sensible simply to get the project off the ground. And the white paper that's been published does give admittedly a little bit of a weak commitment to moving to a permissionless system, but at the start it's going to be permissioned, and it's going to be within that group of governance bodies who have purchased nodes and fulfill the other criteria set in by the association.
And so, what the other members had the opportunity also to address other implications related to Libra that they would like to raise?
One of the elephants in the room is the fact that it is a project of which Facebook has been the really pushing and promoting, and the concerns that have been expressed have been around privacy, personal data issues, and so forth. And some of that is because I guess you could say Facebook has a checkered past in respect of the way in which it has dealt with personal data issues historically, and there is a fear about Facebook's involvement in the project. Now, in fairness, Facebook has tried to address this by stating that they will not have access to the personal data involved in the transactions, and that personal data will this is why they are using Libra, which is a separate entity to Facebook Inc. And it's also, I believe, part of the reason why they've set up the governance committee. But it has been sufficient for some of the privacy regulators around the world to band together and formally write to Libra, Facebook, and other stakeholders in this project, and raised a list of questions about how personal data and privacy issues will be addressed. Now, the people who have signed off on that letter are, the Information Commission Officer in the UK, the equivalent for the EU, the equivalent for Canada, and so forth. So real powerful regulators in respect of personal data and privacy are concerned about a project of this scale, where at least in the early days, apart from some bland statements in the white paper, privacy and personal data does not seem to be integral to how they are designing some features of the system, and that has caused concern.
Okay, thank you, Patrick, for your point of view. That's really interesting, and I would like also to address another point today during this discussion that is that I would like to discuss with Ruth in particular. That is related to the fact that there are other digital currencies. There is not just Libra. So I would like to know more about the others, which are the alternatives, and which are the main differences between Libra and the other blockchain systems.
From a privacy perspective, at least, I think, as Patrick said, even though there's been so much explaining done by Facebook, how they won't actually have access to all this personal data, the optics of it still creates a lot of doubt in users. So there are other stable coins in play that can address the privacy issues. Most of them, from my viewpoint, they don't actually have a history or do think about utilizing all the data protection that they collect from all the exchange and transaction. But there are also other organizations that do sort of see the value in all this personal data that comes from the cryptocurrency industry. And some of them have actually started thinking of ways to deal with this. We have seen a project in reality where what they hope to do is enable users of the coin to monetize their personal data and their data transaction. So in other words, in an alternate universe, you will be able to say, I will allow shops and merchants to see my personal data and what I've been buying and whatnot, and I get paid for that, and I get paid in coin. So there are many ways to address privacy. It's not always about locking it up and masking it, but how do you now take the step forward in this new world, I feel, where it's not just about I want my privacy, but rather how do I have control over my privacy and my personal data. So I think that's quite interesting. Maybe when we talk about other tokens that are more about masking identity, I can ask Sing to maybe share a bit more.
Yeah, I think the vast majority of stablecoins in the market are actually transaction focused. When we have a stablecoin that is launched by a company as large as Facebook with so many users, I think, of course, it raises natural doubts about, look, that's a lot of data that you're collecting. It's a lot of data that you already have and you want to integrate it into a transactional system. So we're looking at two very different sort of animals here, one being transaction focused and one being born from a data focused company. So from a privacy perspective, I believe Libra will and rightfully should come under a lot of scrutiny. But in the context of other stable coins, most of them were done were created to facilitate sort of a stable sort of medium of exchange between to exchange for goods and services. And where data is collected, at least from a privacy perspective, that is usually done at the exchange level. And if you know about exchange wallets, they're not necessarily your personal wallet. The wallet that you have in exchange is the exchanger's wallet. It's not private. So the moment you take your coins out of the exchange and out of the system in which they're collecting data, and you put it into your private wallet and you start transacting from there, then the risk of privacy breaches are going to be considerably less. But if you think about how a system like this will work with Libra, is that as long as it's within the Libra system, right, all the transactions will actually be recorded, and that's where we see that sometimes there's cause for concern about how the data is being handled, stored, or transmitted.
Maybe we'll open up the floor to our fellow members here to hear about their own experiences and thoughts on other alternatives.
So my opinion on privacy, I think the general question, I mean, there are two questions. First is trust within a network like this, because as Padraig explained before, it's all about a company that has a history of practices that were a bit controversial, I would say, in terms of data privacy. So how Facebook will regain trust with this network is one question. The other question is how really their business model will be built, because at the end they will not, it's not a non-profit organization. I mean, it's an association, but I would doubt that it is a non-profit organization. So how are they going to monetize, and what is going to be their model on this project? Meaning that there are some fears that it is an increase of data that Facebook or this project might collect to profile and to have additional information about behaviors and profiles of people, where those people might not be really aware of the consequences of those of that collection, even though people might be remunerated or paid for their privacy, I would say, in exchange of their privacy. It's going to be interesting to see really what is the business model, and how really with this technology and how the setup is made, how how to address, the roles and responsibilities of the parties, controller, processor, joint controllers, who is going to bear that responsibility. How is it going to be transparent, and how is it going to address consent versus another legal basis to process the data? All those concerns, and also erasure, the right to be forgotten, because the concept itself of blockchain, even though it's not only on blockchain that is going to be built, how is it going to address and who is going to be able to be responsible for deletion of the data if there is any requirement and request from an individual. So I think there are lots of opportunities for Facebook to regain trust if they can demonstrate that they think privacy maybe coming from scratch with such project. So I think there's a lot to think about from their side. And there are lots of challenges, but it's going to be very interesting to see really their approach and how they will tackle privacy and anti-money laundering, tax, and all those questions. So that's a bit my view. And as regard to Switzerland, so the Swiss Federal Commissioner has not been part of this discussion, and the joint statement from the authorities that have raised concerns around the globe, but has been has asked some questions to Libra, and he will assess whether he is competent first for assessing and being the supervisory authority, and how it's going to be, what are the rules that have to be put in place in Switzerland, at least, because it's a global project again. So for Switzerland.
Yeah, I think Gabriel just opened a very interesting point, that is how the regulators are addressing this new system of payment. I received many questions in the past in relation to the taxation and the control on the taxation point of view that the regulators can do or can't do in relation to the use of blockchain. So I would like maybe Steve, if you would like to say something more on that point.
Sure. Well, in Korea, the tax has been one of the key focus for the government. The reason being that the personal income tax doesn't cover cryptocurrencies at the moment, so that capital gains from trading cryptocurrencies is not taxable. That is under the law fairly clear. So actually, that could maybe one of the reasons that retail investing in cryptocurrencies in Korea is one of the largest markets in the world, highest penetration rate, I think so, per capita. And corporate income tax is going to cover, it doesn't distinguish between where the source is. If it's income, then you're still going to be taxed. So that for corporate entities, that is still taxable. But yeah, I also, it's not clear how, well, Korea has a value-add tax system, and it's not really clear how value-added taxes to be applied to cryptocurrency. So that's the current situation. I thought Gabriel was talking about Facebook and how it would address some of the criticisms or concerns, and I thought it'd be fun for me to just defend Facebook, or take the position and give a response. I think what they would say is, well, this Libra is not Facebook's cryptocurrency. Facebook is just one member of this Libra association. There's uh, uh, at the moment, already from the launch, there's already 20 some members, I believe, and from reputable companies that all have an equal say in the development of the currency. It is a separate entity that is controlled by these representatives from all these companies, and this association and none of the members are collecting any personal data. They are just um, in charge of making sure that this token, the software, is developed properly, and that it's backed by the basket of reserves, which is supposed to keep this, Libra, the value of it stable. So that's what, how I would respond to your allegations.
Okay. Rodrigue, what about Hong Kong? Is the regulator doing something, or there are other issues related to cryptocurrencies and Libra that you may want to raise?
Libra, maybe not specifically so, but in respect of cryptocurrency generally, there are active initiatives going on, mainly on the security side, where the Securities and Futures Commission here has opened a regulatory sandbox to try and gain a deeper understanding of how digital asset exchanges operate and how they should be regulated. And there are at least 2 companies I know of who are going through that process with the SFC. And there are also better guidance in relation to the regulatory requirements for funds that have an exposure to cryptocurrencies as part of their investment mandate. And recently, there was a cryptocurrency fund that was licensed and approved by the SFC. The reason they were able to be licensed is that they were adopting a fund model, and that is one of the things that would bring it within the ambit of a investment management or an asset management license. So there are a number of things happening within with the regulators in Hong Kong in relation to cryptocurrencies, and also quite a lot of activity happening within the blockchain and cryptocurrency communities here.
Okay. Thank you, Rodrigue. And finally, Ruth, and seeing if there is anything also from your regulator in Singapore, what's happening there.
Yeah, sure. Just want to share a quick note about the taxation regime.
Mm-hmm.
Currently, most cryptocurrencies are actually deemed as a supply of goods and services, and therefore using cryptocurrencies to purchase goods, for example, or even conducting an ICO would be subject to GST, which is goods and services tax of 7%. But I think at present, there is a draft bill being proposed that would actually remove the GST from transactions whereby what we call digital payment tokens are being used as the medium of exchange, or for the initial issuance of digital payment tokens. So I think that's a positive step forward to remove some of the friction from adoption, at least from the business and commercial side of it.
Perfect. We just ran out of our time, so I would like to thank all our members for joining us today for their very clear and interesting explanation and discussion of today. I would also like to thank all our listeners and followers that stay connected with us today, and in particular I invite them to check on our comments below in order to find a link to the document that our experts have prepared for them in relation to the topic of today. They are overviews on blockchain blockchain and cryptocurrencies in the respective jurisdictions. And I also invite them, of course, to follow us on our social media, so LinkedIn and Twitter, and on our YouTube channel and on our platform. I would like to thank you all again, and I really hope to see you very, very soon.